Well, welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Jazmin Mitchell. She's a serial entrepreneur, having founded her first startup and hired her first employee at the age of 15. As an active real estate investor, Jazmin has successfully executed over $1 million in land transactions, while also co-sponsoring over 1,400 multifamily units as a general partner, in addition to being a limited partner in 174 units. So Jazmin, thank you so much for being on the show today.
Thank you for having me. I'm super excited to be here with you today.
Yes. It's great to have a lifelong entrepreneur on the show, and then having somebody that's gone from different real estate classes as well. And you're going back and forth, I know, between multifamily and land, and we'll get into all that. But before we do, can you give us a little background on yourself, a little bit professionally and personally, before getting into real estate investing at all?
Absolutely. I think the biggest part about me is that I came to this country when I was 18, was born and raised in Mexico. And I had to come, I was already doing my bachelor's degree in Mexico, kind of building my entrepreneur side, if you will. I was going to business school and, top university in Mexico. So when I moved here, it was like, okay, none of that counts. You don't speak the language. We don't care where you're coming from. You had to start all over again. So that was, a big setback right there. I had to first learn the language, then go to college. And, I always wanted to start my own business when I was in Mexico, and then I moved here and I was saving money because I didn't know what kind of business to start. Of course, I got my degree on business management and entrepreneurship. But, good thing is that I have the mentor at home. My dad is a business owner. So he told me, whatever business you're going to start, you're going to need money. So I was going to college, saving money, and that's how I saved my first $45,000 right off college. I have that. And I was like, okay, this is enough to start a business, right? Especially on today's world, you see that, Gen Z is building billion-dollar companies with $100, right? So I was kind of like frustrated because I feel like I didn't have a skill set. Like my degree was business. So that's very broad. I didn't know where to start, what kind of business. So long story short, I was like, okay, while I figure something out, let me buy real estate, right? Like I'm making 0.0001% of this money in the bank. And real estate is the safest place to put my money. So I kind of like start exploring, quote unquote, because, I contact my dad's broker and I told him a little bit about what I wanted to do. And he said, like, probably land will be better. Because, I was like, should I buy a duplex and rent one side, or all these things that you can do in real estate, fix and flip. So long story short, bought my first piece of land for $40,000. And that's how I never looked back.
Nice. Awesome. So tell us about like your land business, how it was until before transitioning now into what you're doing. You got started in land, and how did you build that? How are you finding, properties? How are you finding people to sell them to at the end, or whatever your strategy was during that?
Absolutely. That was a really good question. So as I mentioned, bought it for $40,000, and then I got the opportunity to start working for a real estate investment firm. They told me, we're going to teach you everything about real estate. You just need to sell. You just need to be on the phone and connect with investors. So that gave me the knowledge to understand how investors buy, everything that happens behind the scenes, all the transactions and negotiations. And the first realization that I had is like, wait a minute, I didn't get such a good deal on this piece of land. I pay higher than anybody else in the neighborhood. It was on the floodplain. So I sold it. I was like, okay, I have worked so hard for this money. I'm not losing a dime. So I bought it for $40,000, sold it for $45,000. And my strategy there was just to do it over and over again. Buy, sell, have a $15,000 gap that, save that I can make on the property and sell it over and over again. And that's how I bought my first 100 pieces of land, right? Just buying and reselling. I did some seller financing when I had like really good opportunities. Like, for example, just to give an example, One, I purchased it for 25,000 and I sold it for 45,000, but I got $25 down payment. So, I got my money back right away. And then just for 2 years, I was just cash flowing on that property. So I did some of those. And that was my main strategy before coming to multifamily. I realized that land is a really good way to grow your money very quick. But I also realized that I wasn't building anything for the long term. You're just as good as your last flip, right? So that's when I started exploring multifamily.
So before we get into multifamily, land is something I'm not a land investor. I've never been. But I feel that, and there's obviously some learning lessons that you just went through that you realized with your first deals. It's a less perfect market than, let's say, if we're buying or selling single family houses, where now there's 100 plus websites out there like Zillow, where I can go in there and I can literally figure out what the retail price is within a few percent pretty accurately. Now land, a whole different kind of beast. What are some of the high level things that you're looking at that you're going to check first? Because I don't think comparables are maybe as easy to find on these properties. So if you find a potential property, you're speaking to an owner, what are the things that you're using to price that and maybe filter out? You said before, floodplains. Is there something else that you're also using to filter out potential properties and really come to a price where you know that you can make that spread on it, as you said before?
Absolutely. And I can give you all the things that I use, just like, okay, if there's new construction, what's happening in the areas? There are like homes selling, new construction in the area, just big developments, right? So of course I'll look into what's happening in the area right now and what's potentially coming up, who's buying what. Because when you have like a lot of LLCs, you understand their investors. So, so I started analyzing everything. But one of the things that nobody taught me and that has been game changer on the land investing is building the buyer's list. Like instead of me understanding what my buyer wants to buy and the reason and the price and why it works for my buyer, it's better than me coming up with a price, because what you say, like land is pretty much, there's not a formula for land. So when I build a very specific niche on land, and I understood how much they were willing to pay, how are they paying, like I was able to buy those properties and then sell them to them and understand how much my buyer can pay for this, not how much it's going to cost me. Because I bought a lot, you asked me, like, where do you find properties? Like I bought a lot from wholesalers or realtors, right? So, but, before that, I had to understand that there is a buyer specific for this, and this buyer is going to pay me this much. So I'm safe on this, because remember, I was just using my money over and over again, like buy, sell, and, do it over and over again.
Yeah, that makes sense, because with land, as I understand it, there's a lot more uses people can use. If I'm selling you a multifamily property, there's really two things you're going to do with it. You're going to use it as a yield play, which is I've already value added it, and you're just using it kind of as a monthly check coming in, or you're going to put some money, sweat into it, and you're going to value add it and get it to that point of where you can sell it now to a legacy buyer or refinance it for yourself. There's really only a handful of different ways, two mainly, that people use. In land, on the other hand, if you're doing, you can sell lots for someone to build on, recreation. I mean, there's so many different uses people use and different requirements that might be different. So that makes perfect sense, where you start from the end and work your way forward from the buyer all the way back to what you're actually going to source for them.
Yeah, absolutely.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
Yeah. So let's talk about your transition into what you're doing now. You're in commercial multifamily. You're also in land as well with your new firm. So can you talk to us a little bit about what you're focusing on within the realm of multifamily? And you mentioned previously was something about having something a little bit more, investing something for the long term when going into multifamily versus what you were doing, kind of flipping properties and land. So can you go into that a little bit more in depth?
Absolutely. So, of course, I've realized I was just as good as my last flip. And just you mentioned, I had, of course, a lot of spooky stories to tell about that. And I have my own money tied up to that. So I was like, I need to find something else where I'm making money in the long term. And I came across multifamily. Everything made sense to me about multifamily. One, I'm not doing that alone, right? It's not just my money. It's all of us. It's a pool of investors will come together, put our money together, but also the bank, right? Like we get a loan on the property. So one is you're not doing that alone. Two, how quick you can scale. Like I have bought 100 pieces of land. With multifamily, in 2 years, I have 1,400 units, right? So it's just exponential how quick you can scale. The third part is, of course, tax benefits, right? At the end of the year, I have to pay capital gains for all the land because there's no depreciation in land. And multifamily gives me my K1s to write off all those capital gains and everything, right? So that makes sense to me. That make a lot of sense to me. The other part is like the risk, right? Just like the first time that I saved my 45,000 is like I'm still on the same spot. Like I can't lose a dime, right? Like so understanding that, okay, if I have a multifamily property with 100 tenants going to work every day to pay me, it's better than just having one single tenant or two tenants. And if they move out, my cash flow goes to 0 or 50%. So all those things that, made a lot of sense for me on the multifamily. And I was like, this is what I want to do. So just to give you a quick, it's been a fun journey. But when I realized like, this is what I want to do, I start connecting with people like who is doing this. And I was looking for somebody who was already doing it, right? Because it's like, if you're new and I'm new, I mean, we don't know what we don't know. So I started connecting with people. I was looking for somebody who was already doing deals and was successful. And that's how I connected with one of the principals of Massive Capital. And I told him, like, I really want to get in multifamily. My background is in sales. I have a couple business degrees. I think I can do investor relations. And that's what I focus all the time, right? One of the realizations as I start exploring the multifamily side is like, who doesn't need money for the deals, right? Like you go to all these events and networking events, conferences, and everybody has the perfect deal, the best deal in the world. You should invest. But who doesn't need money? So I was like, if I become really good at raising capital, that is gonna open the doors for me to work with whoever I want. And that's something that I can do based on my skill set, right? Like, because I'm not a numbers person, underwriter, none of that, but I can talk to people, I can attend events. So I was like, okay, I have to do this. This is the path that I'm going to do. And I just went all in.
Yeah, I think the money piece, and that's one thing that gets me really upset with conferences and gurus and stuff like this, is that they paint it as if you have the deal, the money will follow. And it's not true. It's just I've had many good deals where I struggled to raise money for those deals that nearly doubled investor returns in a couple of years or 3 years or 4 years, something like this. And that was a great deal, I would say. And it was, I mean, you were struggling because it's something that you have to prime and prepare for many, many years, because there's a lot of money you have to invest. These properties are very expensive, and then they are very capital intensive. Real estate's a great business, but it's very capital intensive. And like, so it's one of those things where multifamily in general is what we're talking about specifically, I guess now. But it's, like you said, investor relations and talk to investors is something that raising money for properties is always an ongoing thing, no matter what the part of the market cycle we're in.
Absolutely. Like I tell people, like if you wanted to raise capital for this deal, you had to start 3 years ago. Because the moment that you tell people like, I have this great deal, it's going to double your money in 1 year, whatever. Like most people, well, first of all, they don't trust you yet, especially if they know that you have a different background. Like I thought you were a lawyer. Like what you mean you're in real estate, Like people need you need to build the trust of, even if they trust you from, it's my friend from the high school, whatever, like they need to have the trust that you're going to deliver on real estate, and it's a different ballgame. So that's one. Second, a lot of people is like, well, I have these deals going on, so I'm not ready. I'll be ready in 8 months, or I'm doing a refi, or, so you gotta be talking about it all the time, because by the time that you have a deal, it's just go time. And you have to have your audience already very warm or hot.
Yeah. No, it makes sense because everybody's at different parts of their investment cycle, let's say, for what they're investing into. If they're having a liquidity event, they're getting funds, they want to place them somewhere. They're tied up in some sort of fixed income type instrument and they're waiting for whatever it might be. It's something where sometimes it doesn't line up. So being involved in investor relations, I mean, what are some of the common misconceptions and fears people have with real estate investing, and I guess multifamily more specifically?
So the biggest that I get is like, I don't want to type my money for 5 years when I can do something else, right? Like I can buy a piece of land, or I can do a fix and flip and double that money in 1 year. So that's probably the biggest pushback. And I totally understand because I can talk on both sides, right? What I tell people, it's important to have both, right? Because, I mean, if you want to double your money quick and of course, either you need to have a business that is cash flowing, or you have to have a high net worth, have a paid job where you have all your bills covered, or you need to do something like that, like flip some properties, because the reality of multifamily is long term. So if you need the money right now, then probably this is not the right time for you, right? However, you also need to build your portfolio in a way that is working for you. Like if I go and flip a piece of land, it takes my time, my energy, team, a lot of resources. But in multifamily, I know I have that investment and it's paying me. So even if I don't do anything for 1 month, I'm going to get the income. I'm going to get the depreciation of the year at the end of the year. And then when we sell the property, I'm going to have a big cash event, right? So having both is very, very important.
Yeah, that makes perfect sense. When you're speaking to these investors and potential passive investors, how are they really overcoming their misconceptions? And maybe do they come to the realization, like you were just explaining, that they need to have something for long term? Because 5 years is something, and it's important to have these conversations up front, because these are some of the pushback that we'll get when people reach out to us. And it kind of like is a no starter. If someone wants to put money for 1 to 3 years, I mean, it's just not how the business plan works, and it's too risky to accept that capital and then have to worry with that investor in 3 years that they want the funds back. So how do you kind of overcome or work with them, for their investors or these potential passive investors, to kind of overcome these misconceptions that they might have?
Well, first of all, I have to be very, very transparent with them and let them know, like right off the bat, like your money is gonna be tied up for 5 years, like no matter what. Like even if you really you have an emergency or something, like there's nothing that I can do to liquidate your funds. So one is make them understand the risk, right? Like, and be very straightforward, because I can tell them like, yeah, maybe in 3 years we can do something, or it's going to be a refi. Everything that happened on the market, like we haven't done any refis, right? So even in deals that we were planning to do a refi, with everything that happened, like we couldn't do them. So, first of all, investors need to understand and take the responsibility of know what you're doing, what you're investing on, who you're investing with. And the other good part that we have with a Massive Capital is that we also do new construction for retail centers. So those are only 3 years hold. And I love that, because there are some investors who they do need the cash flow, right? But some others, for example, when they are investing with retirement accounts, they don't really need the cash flow, because even if I pay you every quarter, your money is going to go back to the custodian and you're not going to be able to use it. What you need is an investment that helps you grow your money as fast as possible in a shorter period of time. And that's what we do with new construction. You invest today, only 3 years is a 1.6 equity multiple, and that's it. And then it goes back to the custodian, and that's how, it compounds faster. Your money grows faster in a shorter period of time. So that's why I also like to take the time to understand the investor and really understand their financial situation, because everybody is different. And one of the misconceptions is every single investor says, I need cash flow, because that's what we get. That's all the marketing that we get. I need the passive income. Yeah, but if you have a really good job, your spouse has a really good job, do you really need the cash flow? Like, is $2,000 every quarter gonna make a huge difference? Maybe not, but you can sacrifice, quote unquote, the cash flow to get a higher appreciation, a higher equity return on your money, right?
Yeah, no, that makes perfect sense. I think the equity multiple, if someone doesn't need the money, is actually a more important kind of metric to view, because that's really your wealth generation. So you're putting in $100,000, you're going to get, 1.45 or 145,000 or 165,000, whatever it is.
1.6 is what we offer.
After that, whenever it's sold, you know what I mean? And that really goes to show you exactly what's going to happen. And I think that's easier for people to grasp versus like, oh, well, you're going to get 3% in the first year, then you're going to get 6% in the second year. That's our goal. And then we're going to try to, all this type of stuff, where it's much easier to kind of conceptualize, I think, the ending of what's going to happen to that money that they've initially invested.
Yeah, and just on that, another key part is the tax benefits, right? There's a lot of people who really need the depreciation. So multifamily is the way to go, because at the end of the year, we send the K1s and they can use the depreciation. But if they are investing with retirement accounts, we can depreciate we can send you a K1 for your IRA. So, like understanding all those little parts is like, well, if I'm investing with cash, probably I can invest in multifamily. If I'm investing in with my retirement account, probably a new construction project. So that's why I say, like, I like to really understand where the investor is coming from and, their financial situation.
No, that makes perfect sense. So you probably speak to a number of different investors that maybe have had negative outcomes with some investments that they've made. I know it's changed from 2018, 2019, 2020, that tune has changed. And when I speak to investors, whether they've invested, who they've invested with or what they've invested in within real estate, if they, a lot of people have kind of horror stories, of what's happened. What do you see are some of the most common mistakes past investors make?
They just jump into it. What I said before, when we go to all these events, everybody has the best deal. Everything looks great on paper. Air is like the most sexy asset. I have it here. This is how the numbers are going to look like for you in 5 years. And that's what we think. But, one of the things that I tell investors, like, no matter where you're investing or who you're investing with, just walk the property. Just by walking the property will give you a completely different overview on the asset. And most important is who you're investing with. Because the reality is that there's always something that is going to go south and nobody was planning for that, right? We on the right, we have a very sophisticated financial teams. And, of course, we have everything in these deals, right? Investors have 50,000, 100, 500,000, but we have everything. So of course, we are very detailing on everything that we do, but we, as investors, they need to understand the risk. They need to walk the property and they need to understand who they are investing with, because it's more important who you're investing with than the property itself.
Right. Yeah. It's like the same thing. Property management. It's another thing like that where it's, great properties and poor property management, or great property management and poor properties, whatever it might be. However that adage goes, it's true, where you have the people that are boots on the ground or the people actually managing the deal are going to really be the deciding factor on, really the success of that project. And that's what I've seen over the years. Just by you can change management on your property and you can see it firsthand, you know what I mean, after a few months.
Oh, yeah.
Yeah. So let's talk about kind of what else you're doing now with Massive Capital. You're inside multifamily, you're working. Tell us about what you're doing. You mentioned to me before about land with Massive Capital, what you're working on.
Yeah. Going back to land is where I started. Of course, I have built a very strong portfolio in multifamily. And now with Massive Capital, what I'm doing is building a sister company just on land, just because I mentioned we do new construction for retail centers. And because, land is where I started and where my heart is, where I have seen, the real results. So what I'm going to do is just build a completely different company, but it's going to be like a sister company that we can fit some deals possibly to Massive Capital and continue doing, land deals. So building a company just for land.
Interesting. Great. So Jazmin, over the years of being an entrepreneur since 15, coming in this country, what are some of the main factors that have contributed to your success over the years?
I think it's mindset. I have seen so many successful people, very smart people, but just because they have some limiting beliefs, they just don't go do it, right? Have you heard about the quote, like, there's somebody with less tools, less experience that you do doing what you want to do, right? And I think that's kind of like, what I had very strong. I just went for it. Like, of course, I have imposter syndrome. Of course, I ask myself, why am I doing here? How am I going to do this? I don't know what I'm talking about. But also understanding that nobody has it together. Like, all of us are trying to figure it out. So sometimes it's easy to get intimidated, especially in these real estate rooms where everyone has $1 billion portfolios and, you're trying to get your first deal or just build a team, a company, getting to your first deal. But just mindset is, is what is going to make the difference between doing it or not doing it.
Interesting. So tell us about the She platform that you run.
Yeah, that's, transactioning to this level in commercial real estate. I realized that there's not a lot of women doing it. And, I wanted to, first of all, show them that it's possible. Like, if I did it, if I, have to build myself from scratch, you can also do it. And there's just a huge need for that, right? Like right now, we're on the biggest wealth transfer for women. You guys and, we men work so hard building all these portfolios, all these businesses. And the reality is that women most likely will die alone, right? Men die first and women. So, just understanding that at one point, we're going to receive that wealth businesses. We need to know how to make decisions, how to grow the money that everybody has worked for. And, I tell people, no matter who your husband is, who your dad is, like, you need to take responsibility of your financial life.
So how can our listeners learn more about you and your business?
Absolutely. Well, they can visit our webpage. Or right now transitioning with over all these web pages, but probably social media is the best way to reach out to me. I'm on Instagram. She is Jazmin. And then LinkedIn, Facebook, so you can find me there. And, I'm very accessible. I love to talk to people, hearing about their stories and hearing their takeaways from this session.
Well, perfect. Thank you so much, Jazmin, for coming on today, and looking forward to connecting with you here in the near future.
Absolutely. Thank you so much for having me. It was a pleasure being here.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.